Start.
Alright, I'll just hold
the, just hold.
it so it doesn't take drain your battery. Alright guys. Alright, guys, can I...
Let's go!
Your attention. Alright, so today we're going to be covering very important fundamentals. So we're going to be talking about support and resistance levels. We're going to be talking about trend lines as well. So these are basically the most, me and Jacob's opinion, this is probably the most, Jacob and I still have that problem. This is probably the most important topic you'll ever cover in all of trading. Everything in trading revolves around these theories and these ideas. So we're going to be covering something called Dow theory. So this is how trends are established, how direction is established as well. We're going to be talking about things called support and resistance levels. These are levels of halts. So these are zones where reversals are possible or likely to occur. And before we get started, does anyone have any questions about last week? Did anyone not understand something? So we're all good?
Lectures up.
Okay, beautiful. Oh, and there's the video up?
Yeah, video. Just
all right.
That's fine, man. You didn't miss much. Last week we just pretty much covered the fundamental indicators. So you don't really have to watch it. We just wanted to show you what indicators are. We explained why they're bad and why we don't really use them as much. So probably focus more on this week than last week. Yeah. You didn't miss much. Don't worry about it.
All right. So we'll get. Oh, is it slideshow mode or?
Don't go full slide. Don't go full thing.
Oh, because it's gonna. Yeah, that's what I mean. Yeah.
Tap it. Just tap it.
All right, done. All right. So try not to sue us, basically. Actually, don't sue us. All right. So we start with support resistance. My favorite. All right. So. This is how we're gonna do this today, okay? So we're gonna talk about the theory first to it, then we're gonna start showing you the prac to it, how to apply these things. All right, so these are difficult to understand at first. They might be a bit hard to get your head around it, only because these things sometimes, if you put them in incorrectly, you are prone to losing a lot of money and being basically making a lot of error. So Jacob and I will show you how to do them the right way from the start. See? Getting there. So we'll show you how to do it the right way from the start. And if you guys have any questions after the class as well, I'm going to stay back for a bit, so please see me. So we'll start with support lines. So a support line is a term used that refers to the price level that historically a stock or asset does not fall below. Buyers tend to purchase a stock at this level. So if we look at this level here as an example, okay, these are lines not shown on the chart, by the way. These are lines that we're drawing manually, okay, generally the horizontal lines. Support levels can also be in diagonal forms or different irregular shapes. We'll talk about these later on. But for now, we're focusing on horizontal levels. Now, what a support level means, okay, if you think of a house, a support is at the bottom, okay? This is what holds everything above it, right? So in this case, what tends to happen is price comes down, it meets a level where there's a lot of, buying pressure, okay? So if price is falling and falling and falling, there becomes a point, so let's say price is dropping down to a level of $80 as an example, okay? So our stock is worth $80. Then price suddenly starts to halt a lot and hold there for a bit. This means buying pressure is picking up. Then our reversal might occur as it did here, okay? Now in this case, in this example, it didn't come back down and hit the support level again, but theoretically speaking, if this price came down, hit this support level again, we've got now 2 touches. This is now valid enough for us to say, okay, here is a possible level of support. Does that make sense? Is anyone confused yet? So what I'm trying to say is the more times that a support level is touched by the price, the more valid it is for us to establish that this is where a reversal or a breakout even can occur. Does that make sense? So a resistance level is exactly the opposite of a support level. This is where selling pressure occurs. So example, price went up, okay, then here we halted for a bit. Okay, sellers started coming in and they came in strong, as you can see with these big bearish candlesticks. This is selling pressure. Price then ended up coming back and touching the resistance level again. Now, is this established? Yes or no? Is this enough information for us to say now here, just looking at these 2 touches, at this region, is this enough for us to say this is a resistance region? Yes or no? Yes, no, come on guys. Want some answers here? Yeah. Who says yes? Okay, and who says no? You say no? All right, can I ask you guys why you say no?
Well, I think 2 draws the resistance line, 3 confirms it.
3 confirms, but 2 establishes.
Yeah.
See what I'm saying? Be careful with the terminology. So 2 is establishment. So basically this is where I say, okay, this is a possible level of resistance. I wait for that third touch for extra confirmation. Now, when we get that third touch here, this is now where I've confirmed, okay, this is a resistance level. Now, just because I'm showing you this image doesn't necessarily mean this is how it is in every single asset that we look at. Because in reality, what we do is we look back in history to see how many times it hit. So last semester, in last year's AGI course, I remember we had probably around 13, 14 touches when we backtested one support resistance level.
Just recently, I did an analysis on NAB and found the support level recently. It's been hitting that support level for the last 11 years. 40 already, or 20% already.
Exactly right. Yeah, so this is what I mean. So these support. Now, here's the thing I want you guys to understand. Just because it hits once, twice, 3 times does not mean it will always hit. As you saw here, we had a big breakout. Now, here's the rule to this thing. We say, and if you guys want to write this down, we always say, sell at resistance and you buy at support. Okay, that's what our advice is in this case. The only reason we don't do the opposite is because 90% of the, well, I wouldn't say 90, I'd probably say 70% of the time, you don't always encounter a breakout unless you do something called multi-time frame analysis, where we look at different time frames to see different levels of structure. So these support resistance levels are also known as levels of structure. Does that make sense? So, if I ask you guys, is this valid enough for us to say here's a support level? Would you say yes or no? Just this support level, is this valid enough? Yes or no? No, right? Because it's only one touch. It's not enough information for us. Whereas this resistance level, it was. Now, why did this breakout occur, you might ask, and how can you predict these? This is why we do this entire course with AGI. It's to predict those sort of things, because these things occur due to probably 30 to 40 different reasons. Okay, so in this case, clearly it's momentum. As you can see, the big bullish candlesticks, and you can see even bigger bullish candlesticks. So this is something referred to as acceleration in the market.
You didn't say hit another support line.
Yeah, exactly right. So this level here is also a level of support. Now, here's the important thing I want you guys to understand here. Okay, first of all, before I continue, is anyone confused? Okay, be honest. If you guys are confused, ask me or ask Jacob, because this thing is very important. Yep.
Is it
So you.
supports on that resistance?
Yep. Yep.
But in that case, where it breaks out, I didn't get what you said about don't worry about breakouts.
No, I never said don't worry about breakouts. I said, example, if we're here, you're not looking at buying, you're looking at selling. In this case of a breakout, you would have lost money, right? Now, here's the thing I want you to understand. This would have been bad to buy here. That's the thing we haven't taught you yet. Because there's something called accelerating in the market. So this is acceleration. Example, momentum is picking up in the buys. And we use different sorts of analysis to confirm that. But the ideal concept, like the overall generic idea, is that you buy at support and you sell at resistance. I'll tell you why. Support also means demand. Resistance also means supply. So in this case, you're looking at supply versus demand. For anyone doing economics or finance, you guys deal with this sort of concepts. You do look at supply versus demand. What happens when there's a lot of demand for something? Price goes up. Isn't that right? That's why we buy at support, because these are also referred to as demand zones. Whereas resistance zones, this is where we refer to them as supply zones. What happens when there's too much supply? The price of it drops. Does that make sense? Example, when the Middle East, as an example, gets attacked, what happens to oil? Price goes up, generally, because demand for oil goes up. So this is where we refer, this is why this whole trading, don't laugh.
Literally said when the Middle East gets attacked and
Yeah.
check your head.
I'm starting a GoFundMe page. Just say that. All right, next, because I'm a trader, that's why I don't have cancel or something.
Actually,
Next.
I just want to address a point that Andy brought up. You said, we want to make a loss. Think of trading like owning the Woolies. You know, you can have a lot of stock and all that and food, but eventually, you're going to have to throw some out. Expect to make losses. You know, Woolies
Exactly
expects
right.
to throw shit out.
Exactly right,
Expect to not to lose money, because that's what's going to happen. The realistic point of it is, Mohammed and I lose money. We've been doing this I've been doing it for 5 years. If you're doing it on your second year, you're going to lose money no matter what, no matter who you are. If you're doing it for 30 years, you're still going to lose money. It's where you put your stop loss that minimizes that. And that's what would have happened in that situation.
Exactly right.
Stop loss on, yeah, you would have lost maybe $50, but there was the opportunity for you to make money there.
Exactly right. And to emphasize further what Jacob said, even though you may have lost money on here, this being a breakout doesn't mean time to buy. You just wait for a retest. And we talk about retesting in a bit. Wait for a retest and then you put a buy position. You make up what you lost and you can make even further. Does that make sense? That's the whole idea of trading. You never get full 100% wins. Otherwise you'll be $1 billion in a week. You own the university, literally, you know what I mean? The idea of it is to have consistent wins. as opposed to consistent losses. Okay, it's about your profit ratio and it's about your success ratio. Next slide. Yep. All right. So no, I didn't mention this part yet. Yeah. So support levels and resistance can act as each other. Okay. So if anyone's confused, I'll explain that simply. Example. Here we have a nice support level, okay? I drew this myself just to show you the analogy to it. So here we have a support level, here we have a resistance level. Price travels up, it's traveling between this resistance and support channel, okay? So this tube being a channel is what we refer to as. Support level comes back up, then here we broke above this resistance level. Now this resistance level becomes the new support level. Does that make sense? Okay, so once the support level is broken, as an example, it becomes what? New resistance. Okay, so if we're breaking support, it became new resistance. If you break resistance, it becomes new support. Does that make sense? The way I think about it is think about it like an elevator kind of. Sorry, not an elevator, like a skyscraper. There's different levels, okay? So you break through one level, it becomes your new ground. You break through the roof, it becomes your new ground. That's the way you think about it, okay? Are there any questions with that?
Questions so far?
Okay, we're all good? Sweet. Yep. Okay, so to emphasize further on what I said, now, how do we draw these things? Not actually literally how do we draw I mean, if you can't draw a horizontal line on TradingView, you shouldn't be in the course. You know what I mean? How do you actually identify these things? Very simple. Now, you have two ways of drawing them, either from the tails. Okay, remember how we spoke about tails from the candlesticks, which are these long lines, these lengthy lines? You can draw them from the tails, or you can draw them from the real bodies, which are the actual candlestick body. Me personally, I like drawing them from the tails, only because it shows me that this is the lowest point that it could possibly fluctuate to. Does that make sense? And the reason I like drawing them from the tails is because at the closing of that candlestick, and we'll talk about this next week, we're going to be looking at different patterns like pin bars, we look at bullish patterns, we look at bullish reversals, hammers, hanging mans. We'll talk about this next week. Not like you don't have to worry too much about it now. But I'm not sure how Jacob likes to draw them. Do you like tails or real bodies?
I don't like to do it from the tails.
Oh, you do real bodies? Yeah.
Yeah, I like bases. Big reason is because that's where the price actually closed. That's where the momentum for that particular candlestick has finished.
Yeah.
You know, there'll be times where you'll see massive abnormal candlesticks where that's absolutely ridiculous, where the body is so small but the tail goes down another 50, 60 pips. For me, that's an abnormality. It's really irrelevant for me. What I care about is where the price opens and where the price closes.
Exactly right. So,
but again, we're different people.
Exactly right. So everyone, there's no right or wrong way to do it, like I said. So the reason I like the tails as an example is just because I like establishing my trades based off patterns in this case. Now, when do these horizontal support and resistance levels work best? Okay, I'm going to test you guys. We spoke about this last week. Okay, so the market does three things, right? What's the market do? It can move in which ways? There are three different ways the market moves. What's the first way?
It trends up, trends down, or ranges.
Or ranges, okay, exactly right. So in this case, when would these be the best to take trades? As an example, just curious. When it's ranging, so when it's consolidating. So when we have sideways movement, that's when it's in our best interest to look at buying or selling. However, there is a condition. If I told you, say, to use these on a 5-minute time frame as say opposed to a daily time frame, what would you rather do? Where would you make more money, obviously, in this case? Daily time frame. Where would it say be more accurate? The 5-minute time frame or the daily time frame? Just as for example purposes.
I want to say daily.
You wouldn't or you would?
I want to say daily.
You want to?
I'm not sure.
Okay.
I'd be wrong.
Who says 5-minute? Who says daily? Okay. Who says neither? Who says both are accurate? Okay. In this case, the daily is far more accurate.
I have to disagree with that one.
My opinion, I say it's accurate. Reason is because I'm looking at noise. So on the 5-minute time frame, there's a lot of noise. Okay, based off my experience. I'm not sure what Jacob's sort of experience you've had. My experience, I say the 5-minute, in my opinion, is not the best for support resistance levels. They're the best for entries. I definitely agree on that case. They're the best for entries. But in terms of just setting up structure, I like looking at the bigger time frames, such as 4-hour, hourly, daily time frame, because the noise is much smaller.
I'd have to counter that and say, do your analysis, do your trend line on the daily, then drop down to the 5-minute to look for anything.
Yeah, that's exactly right. Yeah, so I haven't covered
Were we
that yet.
saying the same thing?
I was just saying the same
Oh,
thing.
okay, sorry.
I just said that.
Sorry,
So,
well, I said it more concise.
all right, it's all right. Yeah, it's all good. So, yeah, so, and
Which one's more accurate? I'm pretty sure that's.
So, okay, so the reason I disagreed with the daily is because if you're doing your analysis on, say, the daily time frame, yeah, it's great. let's say you're doing your analysis at 12 o'clock, 1 p.m. in the day. You've just missed 13 hours worth of data because you won't be getting the proper, the daily candlestick won't be telling you exactly what's going on. It'll give you a rough estimate of it, but you won't actually be able to see what the market's actually doing. If you zoom in on the 5 minute though, you can actually see individual movements, and that can kind of help you identify buying positions.
Yep.
So that's a big reason why I would say that I prefer the 5 minute over the daily.
Yeah. Me personally, my opinion, what I do is the daily. That's just to identify regions. So where there's a lot of buying pressure, selling pressure. Because I don't trade off the daily. That thing's way too long term, and that's I think what Trade Jacob's trying to get across as well. It's you miss too much time at the same time. Like if you're drawing a support level, sometimes you might have to wait months for it to come back down and hit it on the daily time frame.
So really, it's not that it's not accurate. It just takes a really long time for it.
No, it's accurate. So what I'm trying to say is 5 minute time frame. Let's say a news event got released.
The thing that's confusing here is the word accurate.
Yeah. So by accurate, what we say is validity. Okay, so we say like that's what I'm trying to say. Like example, like if you say trading, I don't know, say the 1 minute time frame, and you're setting up support and resistance levels. Let's say a news event happened. What do you think happens? Candlesticks are like that. Okay, what happened to these support and resistance structures? They become invalid because in this case, it's too noisy. But on the 4 hour time frame, that big candlestick like that is now like that. You see what I mean? It's a lot smaller, and that's why I talk about this concept of noise. Does that make sense? Yeah. So me personally, I draw my support resistance levels on the 4 hour, and then I trade them off the 1 hour, and my entries come off the 5 minute, like Jacob was basically saying. Yeah, that's basically how I like to do it. I don't look at daily. Daily, sometimes I just look at it as a guide, just so I understand, like, are we in buying bias? So is like the overall opinion, like by all the buyers, buying, or is it all shorting? Does that make sense? Yeah, so yeah, and that's that. Look, sometimes I'll tell you now, when I first started trading, these do help, these support resistance levels, by using an RSI sometimes, only because it shows you overbought, oversold periods and oversold, overbought regions. But then again, these things lag. It's not enough confirmation for you. It's just good guidance. Does that make sense?
And don't hesitate to draw support resistance on RSIs either. You can do that.
Yeah, you can do that as well. Yeah.
So if you say, let's say it's for the past, say, 10 days, it's constantly been hitting, say, a region of 85. If you've identified that, plot a horizontal line on the 85 level, and that way you'll be able to see roughly where it should start to change direction. If that kind of makes sense. But we'll go through it when we do a bit of a practical example like we did last week.
Okay.
You done with this one?
Yep. Trends. All right, so we'll do examples on support resistance before we get into this.
Sure.
All right, yeah. So Jacob will show you a few examples. Yeah.
So has anyone actually looked at TradingView since we've introduced it last week? Anyone had a bit of a play around with it?
Yeah.
Cool. So does anyone want to just screen one out? So anything and an asset that we want to look at? Doesn't matter. Beside crypto or penny stocks.
Tesla?
Okay, sure.
Or Poland.
No, we don't want to look at Poland.
TSLA.
Tesla. There we go.
Yeah. TSLA.
Has anyone put a trade on since last week? No?
Yeah.
Oh, fair enough. Good on you. How'd it go for you?
Lost 250.
Like 250,000 or $250? Oh, dollars. That's good, man.
Like $2.50?
No, 250.
Oh, so not much.
Yeah, well.
How'd you lose it? With the USD Swiss?
Yeah.
No, but like, what'd you do? Did you?
Yeah. It was trend track. We were talking about this. It was on trend track.
I'm gonna talk about that at the end of the class.
Do you know how to get this back over here? Because I stuffed up last week
yeah.
and
Right
I
click
moved
on
it over and it's really annoying me.
Oh yeah, what the heck? It should be telling you to. Oh wait, go on that settings tab down. Okay, where's your?
You know what? It doesn't matter. We'll do it later because we're stuffing everyone up. All right.
You should, because when you right click on it. Oh yeah, that settings tab. See it?
Oh, okay, cool.
And then click move scale to right.
Brilliant. Okay,
Yeah.
beautiful. Can you see any trends just before we try and? Because I don't really see one. I see one.
Time frame. Let's do 4 hour.
I'm seeing one maybe there.
Do 240. 4 hour. Yeah. All right.
Yeah, I'm
The
seeing.
gaps.
I know it's hard. I'm seeing one there.
That's a good one.
Yeah, but look at that. That is. Would you say that's one? Is that
No,
enough?
down here. Bang, bang, bang.
I wouldn't.
Lowest point in time.
I don't really think that's enough.
Because look at that.
Yeah, I know. I get that.
You know what I mean? There's a lot of pressure there. So that
Should we change to an asset that's less spacey?
Gappy, you mean?
Yeah, gaffy.
Yeah, because I don't like stocks.
So what we're actually going to do for this one is, just because you guys are starting, we're actually going to change the asset. Reason is because of how gappy it is. So gaps, yes, they're a bit hard to place support resistance lines on because you've got, just delete all that. You've got areas of just kind of unknown, so that makes it a bit difficult when you're placing support resistance, and we don't want to get into that kind of stuff when you guys haven't actually seen one been plot. So we're going to look at, what are we looking at? Euro USD? Mm-hmm. Euro USD, Forex. And yeah, that's one. Okay, so one of the big properties about support resistance, make it thin. One of the big properties about support resistance lines is you want them to be relatively thin. You don't want to have massive thick ones. A big reason for that is because you're using your eyes to visually see where the areas of resistance are. If you've got a massive thick line, it can sometimes throw your decision. Anyway, so let's just have a look at this one that Mohammed's thrown up. Are you going off tails or bodies?
In this case, both. Because it's very choppy.
Where's your resistance? That's a bad resistance, dude.
That's not resistance, it's support.
That one there, that's a bad resistance.
No, look. 1, 2, 3, 4, 5.
All right, whatever.
Told you, I like them off the tails.
Okay, fair enough. So what Mohammed's done here is he's plotted a support line down here. As you can see, there's one there, one over here. If you're going off the tails as well, I guess that's close enough. And he's plotted a resistance up here, which isn't too bad. There's one there, shit, there, and almost here. So can you just see how the stock actually, the asset does bounce between those two lines? These are quite valid. They go back all the way back to the December, almost Christmas time. And we're looking at February the 19th. So that's almost 3 months worth of data, and we've been able to see valid support resistance lines. This is kind of why we use them. Again, we want to buy at support and we want to sell at resistance. So our great entry position for us would have been just here, and we could have easily risen that up to there. Big reason why we probably wouldn't enter straight into a short there is, that's a good question, is because if we're looking here, we don't really have enough validity for it. Yes, we do have some touches here, and here, but when you actually look at it, why wouldn't? I'm trying to say why we wouldn't do a double movement on this bar.
Acceleration.
Yeah.
Acceleration. That's the only thing.
The bigger, yeah. So we wouldn't go into a double movement. So a double movement being we've just gone into a buy straight into a short is because we do have quite a lot of, as Mohammed said, acceleration on here. And if we are getting out of the trade at this point, we wouldn't want to necessarily do that kind of a double movement on a trade with such an accelerative passive. Accelerative. What's the word I'm looking for? No, I said accelerative something. Movement. That's the one. Yeah. All right. So does everyone get the idea behind this kind of support resistance? Any questions about that one?
Just one thing. In this case, if you're looking at that market, the overall movement, would that be good to be looking at buying and selling, or no? Just curious.
Is this a good market to get into? Just looking at it.
No, not right now. But like overall, like let's say at that point in time, would you have
Which point in time? Point to it.
like I don't know. I'll just give it an example right here. This is a quick example. Okay, would that be a good time to say buy or sell? Just curious.
It's a ranging market. That's why. Yeah, so I don't understand. Okay, so big reason why that potentially is a good. Are you saying good? You're saying good, yeah. Okay, just checking. The reason why this is potentially a good market to get in is because it's a ranging market, you know. We do have a few abnormalities here, here, and there, but generally the consensus is staying between the support resistance lines. It's a very predictable market. Unfortunately here we had a breakthrough, so we might need to redo support resistance. However, overall it's trending between our two major support resistance lines. Yep.
Isn't that basically like all those peaks and they're all breakthroughs?
Well,
Like breakouts. Big difference. Yeah. So
I don't know. I'd say that one there is pretty
some of
a
them
pretty
not
big breakthrough.
necessarily- Yeah. So I'll explain that. So we should hold it on this one. All right. So now there's something I want you to understand. Oh, I'll just quickly let me just onto there because I'll go blind at that laptop. All right, so to answer your question, these breakouts doesn't always mean it's time to sell or say it's time to buy. Example up there, when we had this breakout, doesn't mean it's time to buy or time to sell, because what's the market doing? Is it trending? No, it's consolidating. So what does that mean? What's the word consolidation mean? And not just that, there's an actual word for it. Indecision. Doesn't know what he wants to do, right? So this is the whole this is why we're teaching you trends. So the market does one of three things, like we said. It trends up, down, or side. How do we identify trends? We're just going to get to that in a bit. So high highs, high lows, and etc. But if it's not making either of them, it's consolidating. So in my anticipation, in my theory, in my knowledge, is that, say, if we're looking at buying or selling a support resistance, when we have these big peaks, doesn't mean now, okay, time to go down to the bottom. No, it's because we're not making lower lows, high highs, whatever. We're going to explain those in a second. In other words, we're not trending. Now, 80% of the time, the market consolidates. Only 20% the market trends, and that's proven, theoretically proven. And I've read PhD papers on that by professors. There's a guy named Bill Williams. He's the guy that invented the fractals indicator. 80% of the time, the market consolidates. Now, you might ask yourself, okay, so in that case, okay, how the fuck, are you going to make money? No, because I thought we're censoring it today a bit. So.
We'll be low-key, but
Yeah, we'll be low-key. So how do we make money if 80% of the time it's consolidating and 20% of the time it's trending, right? This is the thing that everyone asks me. Well, you can make money all three ways. Now, when you are trending, as an example, that's the best way to get in. You get in on pullbacks and etc. But with these fake breakouts, there are ways you identify them. There are ways. Okay, so we look at things called Fibonacci ratios. I'm not sure if Jacob uses pitchforks for these things. Do you use them for fake breakouts or not necessarily? I don't use pitchforks, that's why.
you could.
You could? All right. You can use like this whole concept of overbought, oversold periods, which we're talking about in a second. Now, here's another thing that I personally like to do. How do we identify these sort of things? Okay, well, first of all, we look at the overall bias. Okay, so today we're going to be doing kind of like a checklist. Okay, so how do we buy and sell through consolidation? First, me personally, Jacob will show you how he does it. I'll show you how I do it now. I first look at the high time frame, such as say the daily time frame or even the 6-hour time frame, just like some random time, like a higher up time frame, not a weekly though. I don't look at that far ahead. And I start looking at support resistance structures to identify what the overall bias is. Then I'll look at the trend direction. If we're consolidating, if we're making lower lows, lower highs, high lows, okay, so in terms of trends. And then I determine something. Example, if on the daily time frame, say it's in selling mode, okay, so we're looking at bears. Who's in control? The sellers, right? So the overall bias is selling. This is on the daily time frame, if it's in a downtrend, that is. On the 4-hour, then say we have a period of consolidation. Would I be looking at buying or selling? That's a trick question. Just curious. Who can answer the question? So on the daily time frame, let's supposedly say it's actually fuck the daily. On the 4-hour time frame. Let's supposedly say on the 4-hour time frame, it's on a downtrend. Okay, we'll go a bit more short term. Okay, so 4-hour, we're just going down, making lower lows and lower highs and lower lows, lower highs, okay? And then say on the 1 hour, it starts to sideways. What's the bias? Who can tell me what the bias is? On the 1 hour time frame. If we see this consolidation, I know on the higher time frame it's still downtrending, and then on the 1 hour it's consolidating. Would I be looking at buying or selling? Who can tell me this? Who said selling? Who says selling? Raise your hands. Okay, and who says buying? Who says neither? Okay, who says they're going to quit trading? Okay, sweet. In this case, you're going to be looking at selling. Okay, reason is because if your overall bias on a higher time frame is selling, that shows you that the overall amount of traders in this asset are sellers, which means your momentum is overall to the downside. Now that could change, don't get me wrong, that is subject to change, that could go against you. But in terms of probability, okay, we talk about selling. So in this case, I wouldn't be looking at buying a support, I'd be looking at selling a resistance if it was downtrending on a higher time frame. Does that make sense now? It's just safer in that opinion. That's how you trade a consolidating market. Okay, are there any questions?
Right, so I just have a question for everyone. Who thinks the more support resistance lines you plot, the better? If I had, say, I've got one pair here, let's say I had 4 pairs of support resistance, do you think that's good or bad?
So if there's like 10 lines,
is that good or bad? It's obviously bad. Because the more lines you have, you might be able to see a bigger picture of things, but you're actually more restricted.
Exactly.
Let's say you had a resistance line. Let's say you plotted one there for whatever reason. I'll just put a cursor there so you can see. Let's say I put a resistance line, say, what was that?
You don't want to know.
I don't want to know. So let's just say I put one there and this dotted line is supposed to represent a resistance line. Yes, in some situations it has acted just as it should, as a resistance, such as there, potentially there, and maybe even a little bit there. But the more you start to plot, the more restricted you're going to be. So let's say you did enter into position here. To you, it would have said get out here. Same thing if you were to plot one, say down here, because there's another one just there. It would have told you to get out of your positions earlier. Now you've seen how Muhammad places support resistance lines. He likes to look at the candle. Personally, I don't like looking at the candlesticks when I place my support resistance. What I do is I actually like to look at the lines. I switch it to the line. Reason being, it removes abnormalities, it removes price extremes, and well, for me, it just makes the graph a little bit easier to see, a little bit easier to look at.
But that's not like you can't identify patterns.
No, don't. This is just support resistance. That's it. Okay. If you try and identify patterns using a line graph, just shoot yourself because it won't happen. You can't see buy and sell candles. But what we can see quite clearly is we can see these lovely spikes of areas where it's just hit that and bounced up. And that's kind of what I look for when I'm placing my support resistance. I'm looking for these closed areas where the trend has changed or there's been a change in direction. So let's have a look at this situation here. Now, if you were placing a support resistance using candlesticks, you might have been able to place one there, or there. But when you're using a line, you can't see that. So you're only looking for the areas where it's actually changed. And that's kind of why I place them. And for me, I feel like it's more accurate, but that's up to you to make that decision.
Yes, can you just switch back to the basics?
Yeah, sure, man. No worries.
All right, so just one thing I wanted to quickly touch up on. Okay, there is conditions to support resistance levels. This is something I recently actually found out. It wasn't like something that's available for you on YouTube to find out. How do you identify, like you were talking early on about these breakouts, okay, and you were talking about direction, like, okay, we had all these breakouts and whatnot. Now,
put support resistance on there.
yeah, sure, bro, no problem. So clearly, early on we had a support level there, right? Now, let's say price came back down here, okay, and here. Who would have honestly, yeah, right there, beautiful.
No, don't.
Just move it down a little bit.
Yeah.
Oh, I'm not looking at the top one, I was looking at the bottom one. So, okay, so here, you as a trader now, okay, so this is a question to you guys. I want you all to engage in this, okay? I want every person to answer. I'm not even kidding you. Who would have bought here? Honestly, who would have bought here? Okay? Let's forget, before we answer that, let's forget.
Sorry, so I can show you.
Ball right there, on the third one, yeah.
This one?
Yeah, third touch, yeah.
Okay, ball there.
Bearish. Yeah, okay, so in this case, let's forget this whole idea. Just for this example, let's forget this whole idea of biasness and where the overall trend is and whatnot. Okay, just for example purposes, who would have genuinely bought there? Honestly, who would have bought there? You all would have placed a buy there. Okay. Now, put your hands back up. Who said buy? I'm gonna pick 2 random people and I'm gonna ask you guys to tell me why. Your hand was up. Now you with the white shirt. What's your name? No, I'm looking at you. Yeah.
Oh yeah.
What's Siren?
Sorry. Yeah.
Siren?
Yeah.
All right. What would you have bought there?
I would have put a trailing one. So it's
Trailing
like
stop.
where it enters, it has to go off a bit to actually
Alright.
enter you.
Yeah.
So because clearly there's
So an entry, an order, in other words.
Yeah, an order, exactly.
Exactly
Yeah,
right.
so
Alright.
order, I would have put one of those in.
Okay.
Obviously we have these huge selling ones, and it could the momentum could carry it down. So
Alright.
I'm not actually locked in, but if it does rise, my thinking is it's likely it'll go back up.
Okay.
There's heaps of demand because we're straight at a
Okay, beautiful.
support zone.
Jacob, would you have bought there or sold?
Oh, listen, I probably wouldn't have touched it. I don't think the big reason why I wouldn't have gone into it is because you're actually going against, I guess, the trend. It is not really like a massive trend, but you do have this massive candlestick, and then you've got another one there. So for me, you've got 2 quite big candlesticks. For me, intuitively, it seems like the next one would be a big candlestick. Even though it has hit a support area, we can't actually classify that as a support area yet because we only have this much data here. And in this section here, there's actually no region of support. So personally, I actually wouldn't have got into this trade as a support, as a buy or sell. Reason why I wouldn't have gotten into the sell either is because of this situation here. I would have gotten into the trade, what, 8 hours late? No, thank you. If I had gone into that in the first 20 minutes, 100%, that would have been lovely. But I'm not going to get into a trend 8 hours late after it's already started.
Exactly right. All right, so now the sellers, who he would have sold? I saw a few hands early on sellers. Put them back. Okay, no one's selling now. No one's selling.
Conviction, guys. Like, get behind you.
No, seriously, who would have sold? Genuinely, who would have sold?
It's better to stuff up here than stuff up in a
All
trade.
right. Who would have done nothing? Okay, so you guys say nothing. Okay, so hands back up, all of you. I'm picking another person.
Maybe you should have done
I want some. You, the green shirt.
Yeah.
So what would you have done nothing?
I was actually thinking very similarly. Also, just because it just previously did have a further, like a lower point, like just looking from that little bit of data.
Yeah.
So I would have been scared that it would have come down further.
Down further? Oh, okay.
But then it also was did have a line as well, so it could have gone up, could have gone down.
Okay.
Just didn't have enough information.
Beautiful. All right, beautiful.
Before you keep going, Mohammed,
Mm-hmm.
what if I did something like this, mate? What if I drew this kind of line here? Would that have changed your decision? No? Does that change anyone's decision? Even though there's support here? Would that have changed anyone's decision? Good, because it
Very
shouldn't.
good. Exactly right. So that's the thing. You can't make assumptions. Make sense? Now, my theory, okay, my analysis on this are three things. The euro dollar, first of all, is absolutely shitting itself. That's first of all. That's fundamentals, okay? That's my personal opinion due to Brexit and etc. Don't have to worry about any of that now. That's like later on week 7 shit, like fundamentals. Second of all, because it's the reason I spoke about using this case, does it imply on this chart, yes or no? On this time frame? Would a news imply on this time frame? Because it's a long-term time frame, it's 4-hour time frame. So with economic news and economic changes apply, yes or no? You guys are really quiet today. You guys are still in sleep mode. I want like a yes, I want like wake up, you know?
So who reckons on the 4-hour time frame, does news matter?
Of course it does.
Of course it does.
Long-term wise. Alright, so now, me personally, I would have done nothing. Okay, 2 reasons. At first I said you buy at support, right? So if I was looking at buying here, it's suicide. In my opinion, okay, at that time, it would have been suicide for me. Looking at these big candlesticks, that's acceleration to the downside, okay? Now, sure, it reversed and went back up. That's just because the market's consolidating, so it doesn't know what the fuck it's doing, in other words. Does that make sense? Now, in my opinion, like Jacob said, I too would have stayed away from it, only because of the whole acceleration part, because I don't want to be looking at selling at support. Does that make sense? That's the whole concept of it. All right, so yeah, let's start trends.
Yeah, just,
Do you have anything else
Yeah,
you wanna
actually
add?
I'm going to pick out someone random and just, it's already plotted, so just come up and just point where do you think, like, the best position, even though you've got all the data, you'd easily be able to sell it, see what would have happened. Where would have been the best possible point to buy in? Just tell me why. Rami.
I don't know what happened
Yeah.
to the thing. It just opened the flash up.
Yeah, it's fine. It just means it's still going. So, on this graph, you have all the data. I want you to pick a point and tell me that's where you would have bought, and I want you to tell me why.
I would have bought.
And I'm just going to show them on the computer. So yeah, where would you have bought?
Here, because there's a massive rejection wick,
Right here?
and followed by a bullish engulfing
Try to stand to the side of it so everyone can see it. So you would have bought there?
after the close of the bullish
Okay.
engulfing.
Now, in your case, why would you have done that?
Because before that there's a massive rejection wick.
So big pin bar, right?
Yeah.
Okay, but is that enough information?
No.
Okay, because look at the candlesticks before, look at the selling pressure. And that's why we had this breakout eventually. See what I mean? You've got to be very careful with that. That's the thing we want you guys to understand is look just before it as well. Look at the pressure, that's all it is. You got to look at that pressure. If you have, say, big bearish candlesticks like that, okay, and then we hit a support level, you're looking at buying, that's suicide. You know what I mean? It's my motto, in other words. You want to kill yourself, basically.
Alright, but yeah, that's a pretty good point to buy in though. So I'm going to pick another one to pick a sell position.
You know what we should do, actually?
Tell me.
We should go back in time, plot resistance.
Yeah, we'll do it. We'll do it. But
support,
we'll,
like get them to the wall.
We'll go it through all the work and then we'll go back into that. Okay. Teach them all the theory and then we'll go
And
back.
then at the end. All right.
Yeah, that's what we do. Domestics. Dude in the green shirt, straight at front center. Yes, man, you. Show me where the perfect sell position would be. You're gonna have to stand up.
I think, I mean, it's easy for me to say now, but I think like there, because when I'm looking from, let's say around there where it peaks, there's a downtrend and it's making lower highs and lower lows.
Yeah.
So again, then over here, because
You just put a resistance line right there and see if it works.
I think there's a name, I'm sure there's a name for it, I don't know what it is, but you've got this period of consolidation and you've got the green and the red candles like in alternating patterns.
Okay, just
So
because they're alternating doesn't mean anything.
Okay, but that's a sideways movement, so it looks like
It's coming towards the end of a trend or something.
it's coming towards the end of this this upswing over here.
Yeah, no, you've made a good point, and it does look like there is an area of resistance there. So that's pretty good. Is it potentially the best?
I personally would have sold it.
You would have.
I would have sold it. This is how I would have done that. If you want my.
It was very good though. Yeah, it was pretty spot on.
No, I was waiting for someone to point that region out, and I'm glad you did. So we're clearly seeing the overall bearish bias because of the bearish candlesticks, right? You guys can see here how big the candlesticks are. Okay, just looking at that chart, what's bigger, the reds or the green candlesticks overall? Clearly the reds, yeah? You can see more red than green, okay? Bigger reds than green. So that there just shows you your bias, your possible bias, okay? So if you're looking at selling up here, there's actually four reasons as to why I do it. The first reason is the rejections. You have 4 rejections with those big pin bars. That's why I do them off the tails most of the time. We talk about these pin bars next week. These are called Pinocchio bars, which stands for lying bars. Okay, so they're called fakers. Talk about this next week with patterns. Second of all, your bias. Third of all, you're selling a resistance. And your fourth thing, your entry. Your entry wouldn't go straight up here. No. Your entry will go around this point here, right below. See this period here? This is consolidation. Now this is on the 4-hour time frame. If you drop that down on the 5-minute, that's where you place your entry. Because you'll be able to see this region here sidewaysing. Does that make sense? And then on the 5-minute time frame, if you see it sidewaysing, you wait for a breakout. Does that make sense? Cool. So that's how we do it.
Good to move on to the next slide.
Yeah, let's do the trends.
Wrong one.
By the way, that's not my strategy. Just saying.
We just covered that. That's just an example of a trend.
Oh, hey, go back. 2 slides. I think with the high, low, low.
Oh, you haven't done that?
Oh yeah. This is very important. All right. So, oh god, I hate explaining these things. All right.
Talk about that.
Yeah. So this is Dow theory. I don't know what the word Dow stands for. Do you know what it means?
I thought it was a guy.
It's a guy, but I don't know his name. So we just call it Dow. D-O-W. If you guys want to search it up, Dow theory. Now, this is probably 95% of all my trades are based off this concept.
I don't use it.
Jacob doesn't necessarily use it. I do. Okay, probably 80 to 90% of the time. Even all the algorithms I've built, it's a lot. Like it's based on this a lot. Okay, so I rely on this theory a lot. Basically, what Dow theory just means is just trends. We're looking at trends: uptrend, downtrend, and sideways movement. But in this case, we eliminate the concept of sideways movement just for now. And I want to talk about uptrends and downtrends. Now, an uptrend. Okay, and write this down for the new people. Very important. And I suggest you write this down. An uptrend is composed. Okay, sorry. Before we spoke of an uptrend, a trend is composed of 2 things. The first thing a trend has is a rally. Okay, so a rally. I'm going to talk about this in a second. The second thing a trend has is a pullback or a retracement. In other words, okay. So we have a rally, we have a pullback. Okay. Now you don't need to know what that is just yet. Okay, but this is extremely important. So we have a rally, we have a pullback, or a retracement. Okay, they mean the same thing, those 2 words. Now, with an uptrend, okay, it's composed of 2 things. You still have this whole concept of a rally and a pullback. Don't get me wrong, that's for every trend. We'll talk about that in a second. But it's composed of higher highs and higher lows. A higher high just simply means, okay, so if we look at this emphasis here, we look at this scenario, we start at one point, okay? We start low, okay? For anyone writing, I suggest write after. I'll give you time, maybe a minute to write. For now, I just want you guys to understand this, extremely important. So we have a low, then price moved up. we form a high. Okay, so standards. We have swing low, swing high. The word swing just means movement. Okay, just generic movement. What the
Just keep going.
Such a child sometimes. Honestly. All right, so we have low, we have a high. Now, what tends to happen is we have a higher low. Okay. Now, this is called your pullback or your retracement. Okay, it's a higher low. This just means that we are higher now. So at this point in time here, we are higher than the previous low. That's why we call this a higher low. Does that make sense? Yes or no so far? You guys with me? Yeah. All right. Me personally, okay, because I have a lot of experience with this. Okay, I've been trading with these for almost 2 years. The best option is to always buy. Okay, well, actually, I wouldn't say buy because it's two trends. To enter at the end of a pullback. Does that make sense? Example, you wouldn't look at buying here, okay, because that's not enough information to tell you that's trend. You wouldn't look at buying there, because there's no fucking reason to buy there. And you'd look at buying there because now we have a pullback. Now, how do we identify these things? I'll tell you in a bit. So, that's a higher low. Then, we formed a higher high. This higher high just means now we are higher than the previous high. Now, this is an established uptrend. This is now where we look at making big bucks. Does that make sense? Okay, so we spoke about this whole consolidating period and we don't know what the heck is going on and whatnot. Now, Dow theory says, after an uptrend comes a consolidation period. Okay, well, we have a range. Okay, so here's the uptrend, then we have a consolidation period. That's what Dow theory says. Okay, doesn't happen all the time. Sometimes it goes straight from uptrend straight to downtrend. Okay, sometimes it goes from uptrend, continues going up. Okay, sometimes it goes from uptrend, downtrend, sideways, down. Okay, it's just all over the place because the market's very, very, very hard to determine what the fuck's going on. Okay, so this case we consolidate, then we move into a downtrend. Now this is where we form the opposite, lower lows and lower highs for a downtrend. Okay. Yep.
Does that mean your period of like going to a higher low and a higher high doesn't include any consolidation?
No, doesn't include any consolidation.
So you can only establish like those trends so you can clearly see it just like.
Yeah, making high highs and high lows. And we talk about this with trend channels, which we're going to show you after. So we'll show you how to set these things up. However, sometimes these pullbacks, they can range. Does that make sense? These pullbacks, see how it's just a nice dip down? Sometimes they can go to the side. Okay, and then it'll continue going up. It'll keep making high highs and higher lows. But the reason I said never ever say, if we're here at a high, would we look at selling here? No. This is my number one rule of trading. Okay, this is my most important rule. Never go against the trend. Your trend is your friend.
You know, normally I disagree with Mohammed on a lot of things, but yeah, if you go against the trend, you might as well just throw your money away, put it into the end, light on fire.
And just jump off a building or something. Like
dump it in Sydney Harbour. Like seriously, you're wasting your time.
Jump in an oven or something. I'm not even kidding. Like cook yourself or something. I don't know.
It's like running against a bus that's going 60 kilometers an hour. You're gonna lose.
Exactly right. It's like trying to argue with Jacob. You're gonna lose. So
exactly, because I'm always right.
In his case.
I got you there. You think you're smart, but I know.
Shut up, you look like a drunk hobbit. So anyway, so going on.
That's a new one.
That's a new one.
Yeah, keep going.
Alright, so
I'm cooking or something.
So we never go against the trend, okay? Now it's because of this whole concept of being against the trend you don't want to go against. And the second reason is, as an example as to why we wouldn't sell here, is because pullbacks don't always just dip down, okay? They're sideways. Now when you get to say an experience level, like say Jacob and I, later on, okay, you'll be able to actually go against the trend. Okay, for now you don't do that. I personally do. I trade in many different ways. Okay, I'm an aggressive type of trader only because I'm a short-term trader, and the reason I'm aggressive is because the market's just as aggressive as I am. Does that make sense? Now, me and Jacob, shut up, you hobbit. Stay there. All right. So the reason is, but that's his new name. He's a hobbit. Okay? So yeah. Any questions with high highs, high lows, low highs? Now, I've got a little tip so you don't get confused. The first word higher, okay, just represents the trend direction. So if it says higher, it just means you're in an uptrend, okay? So if I say lower low, what's that mean? Are we in an uptrend or a downtrend? Down. Look at the first word, lower. It just means we're going low now, okay? We're going lower, okay? Then if it's a low, you know it's a pullback. If it's a high, you know it's a rally. Now this is called, these things here, from the low to high, these are called your rallies, okay? This is the thing that I mentioned earlier. And these pullbacks are called your retracements or your pullbacks. Okay? So how many questions?
Next slide.
Yep. Oh yeah, so Okay, example. Is this a valid uptrend? Yes or no? You say yeah? Is it valid? Now, what did I say early on about support resistance? Can they just be horizontal levels? No, they can be diagonals now. Trends act as support resistance levels. Does that make sense now? They can be in diagonal form as well. So an uptrend in this case, uptrends act as support levels. Write that down. Okay? Uptrends act as support levels. And downtrends act as resistance levels. Okay?
Wait, do you mean trend lines?
The trend line, that's correct, yeah. Not the actual trend. Like
Yeah, that's what I meant.
the trend line, of course. How many touches? Same thing. 2 is an establishment, 3 is a confirmation. Okay? The more than 3, the more valid it is. All right, so in this case, we had, this isn't even a touch. This is where we started. So here will be your low, your high. Where's your highest point in this case? Sorry, I was up here. So your low to your high. Okay? Here's your high or low. Now we look at buying, right? But is this enough information for us to be buying? No, because we don't have enough touches. So that's 2, that's an establishment. Then we went on and on and on. Now, where's your next higher high from this point here? Where would your next higher high be? This is a trick question. Would it be here? Who says here? Hands up. Yeah. All right. Who says, no, just below it, previous swing high, yep. Who says that's your higher high? Hands up. You say, guys, say that's a higher high? Okay. Who says that's where the higher high is? The next peak. You guys say that's a higher high? Okay. What about the next peak above that? Who says that's your next higher high? No one? Actually, that's their next higher high. Who can tell me why? No. What comes after a higher high? A pullback. Is this here a valid enough pullback? No, it didn't touch the trend line. So this is the understanding of this, okay? This is why we draw these trend lines. Does that make sense now? We have a low, we have a high. A high or low, we touch the trend line, okay? So now this is our pullback, it's established. We don't look at buying here though, there's not much information. Then we went up, okay, we formed possibly a high here, but it didn't come back down, didn't touch the trend line. So we're like, okay, we're still in high territory, still making high highs in this case. Okay, so it's still going up and up and up, and then bang, we hit our trend line. Now, do we look at buying here, yes or no? Theoretically, yes. Logically, yes. Because now you have 3 touches, okay? It's the end of a pullback. But what's one thing I spoke about early on as to why I say I wouldn't buy there? Who can tell me why you wouldn't buy there?
Because the red candles are getting bigger.
Exactly right. So we're starting to accelerate to the downside. Now you see how we tie up all the things into each other? We have this acceleration.
Remember last week that we talked about the 3 black crows?
No, we haven't spoken about that. Next week we're going to do that for patterns here. So example, these red candlesticks, look at the bodies. They got bigger and bigger and bigger. Sure, here we had a rejection, but the candlestick momentum is picking up, which means we can possibly anticipate a breakout, okay? Or we could possibly anticipate consolidation right after it. Does that make sense?
Acceleration and momentum. We use those words interchangeably.
So acceleration means the market's starting to pick up, right? So in a certain direction, okay, so it's accelerating. The word momentum just means the direction is starting to shift. 2 different things. When you accelerate, you're looking at short-term acceleration movements. Here, we accelerated to the downside, but the overall momentum is up because it's an uptrend. See what I mean?
Okay, yeah.
Big difference between the 2 words.
Next one?
Yes, that's all I can think of. Yeah.
There's
Okay.
another example, pretty much the same thing. Do you
All
want
right.
to
So
throw it,
yeah, we'll quickly do it. Just I want them to understand this concept. That's why.
fine. Yeah.
So what's this? Uptrend, downtrend, sideways. Who said down? You're all wrong. No, I'm just joking. Yeah, it's down. So we have our low. We have our high. We have our low. Our lower high. Is that enough information? No. Okay. Then we went down. Did we hear? Is this a pullback? No, didn't touch the trend line. Okay. Now, me personally, Jacob, do you trade with trends?
Yeah, of course, man.
Do you put them based off candlesticks or tails? I put them off tails, me personally, just so you can see the lowest or the highest point he touches.
I prefer off the bodies.
You do always do bodies, okay. So there's no right or wrong, by the way, with bodies or tails. Okay, it's the same thing, literally. Only difference is
Oh, but just don't mix them.
don't mix them, exactly. So
Yeah.
don't like draw from a tail to a real body. You don't mix them.
That is like next level retouch.
Yeah, so
Wait, why not?
Because it's like you're comparing a close to an extreme
To a
value.
low. Exactly right.
You know, it's like it's just not going to work. Like it'd be like putting a trend from. I'll do it on the computer. So it'd be like putting a trend line from say that body there down to
That tail.
that tail. It's
Not
like,
enough
yeah,
information.
both hit resistance, but
Not enough
it
information.
just doesn't work.
Exactly
It's
right.
not, not enough work for you. Yeah.
Especially if you want to tear patterns. Does not work. Yeah, man?
If you draw a resistance line using the bodies, then
You would have a touch there, and a touch there also.
Yeah, 100%. That's valid. Yeah.
Exactly right.
But then it's different from what he's saying.
Well, see, okay, yeah. So the reason I prefer real bodies is because that's where the price actually closes, the price actually opens. So yeah, Mohammed likes to look at extreme values where the price got to its highest or its lowest, so that he can make a decision to say, okay, in my next trend, it's unlikely that the price will go past this point. Myself, I like to look at where the trade closed. Reason for that is because I don't really care about the extreme values. I want to know the general direction of that trade. So if I'm putting it on the bodies, as you suggested, yes, I would see that there is an opportunity for me to enter into a short. See as where Mohammed potentially would not have because it didn't actually touch a body. In this situation, yes, I would have made a little bit more money. However, there are situations where it's the other way as well.
Exactly. Now, there is one big reason. Everyone always asks me, why do you use the tails, not the real bodies?
I'm just going to explain it.
No, there's one other thing I didn't. It's to do with the stop loss. So, the reason shut up, you hobbit. Sit there. All right. So, the reason I like the tails more than the bodies is for one big reason. This is why I said this is my experience because I fucking got fisted with this shit. I'll tell you, I got fisted. All right, and I didn't enjoy it. I'll tell you that. I don't think anyone would enjoy that shit unless you're fucking weird. So, example. Who knows, bro? You'd be surprised. Shut up, you hobbit. Go get fisted by
you know what,
Hagrid.
actually, just go back to the real body one. This is a situation where it would have worked against me. So see, at this situation here, for Mohammed, he wouldn't have entered that trade. But for me, I potentially would. I wouldn't have. But let's just say I was going strictly off touches. I would have entered into a short there. I would have potentially made a little bit of loss. Although I would have made my money back, depending on where my stop loss is, I would have lost money. Does that kind of answer your question a bit better?
Maybe, but you said earlier that like a third touch of support or resistance confirms.
Yeah, 100%. And I've got my confirmation back here, and
And
here.
he hasn't got his confirmation until like 2nd of March.
Exactly right.
That's fine. He might be going for a bit longer of a trend. What it might end up happening is he's just setting up an established. So let's say you put me on the spot here. Okay, so let's say Mohammed's trading on the 6th of January 2012. He would have had other support resistances set back into the past. So for this example, let's just assume that we're trading somewhere around here where the trend is already established.
Exactly. Can I just point something out?
Go for it, man.
Sorry,
Cut me off.
No, talk.
No.
You finished?
You've made it clear that you want me to shut up.
No, you're drunk, bro. So no, I was just gonna quickly say something. I was just gonna point out something. There's another reason. I don't know about you, if this fucks you up the ass or not.
Go.
It sure would do to me. What do you notice happen with this candlestick? If you're basing it off real bodies. See that big green candlestick? What do you notice about that? Did you close above the trend line or below the trend line? This big green one here. Where'd you close? Above the trend line? Okay, so would you possibly anticipate that's a breakout? You as a trader, back there, you would have said that's a breakout. But that's a fake breakout. That's why I like using the extremes. So I can avoid these whole breakouts, those fake breakouts. Does that make sense? Do you want to finish what you were saying?
Yeah, I was just going to say, in the situation where Mohammed was trading, say in an area like over here, he would have quite easily just set up another resistance line using the tails. For example, one that could have just gone there, or one that could have just gone there. You would have been able to make another one for sure. That's all I wanted to say on that. There you go.
Thanks, Prof.
Next
All right,
slide.
so yeah. By the way, any questions?
Any questions so far? We all good?
By the way, there's literally, just very quick, there's no right or wrong, okay? Whether you use real bodies or tails, it's just your type of style, how you like to trade. There's no right or wrong. Me personally, I just don't like using real bodies only because I like patterns. I like looking at those big candlesticks. So when it closes, I could see how long the tail is, okay? So it shows me pressure. That's the only reason why I like looking at the tails.
And I just care about where the momentum actually is.
Exactly. So he's basically likes looking at the momentum. I like looking at the pattern. Does that make sense? So there's no right or wrong. As long as you're making money, that's all that counts. You know. Yeah.
Kind of covered that.
All right. So what's that? Uptrend, downtrend, sideways movement. Sideways consolidation. Beautiful. All right. That's very good. Yep. And we spoke about that already. They act as support, act as resistance. Next, act as resistance. Okay. So here. Now, is this correct? Have a look at this chart. I drew in these arrows manually. I want you guys to tell me, is this correct? The way I've drawn the higher highs and the higher lows. Is this correct? No. Okay, why isn't it correct? Exactly right. Because the pullback didn't touch the trend line. See what I mean? So that's incorrect. Sometimes when you're first starting off as traders, like you guys are, it's best, there's an actual arrow feature you could use.
Just ignore me, I'm just drawing something, I want to see something. Just say ignore the person drawing on the screen right now.
Ignore the drunk hobbit drawing on the screen. So, actually no, ignore this Bergen. No offense, man. I love Bergens, by the way. Okay, I used to be I'm an ex-Bergen, as you can tell by my haircut. I'm going to shut up now. So, yeah, so...
I'll talk about that in a minute.
Yeah, so what was he going to quickly say? Yeah, so on TradingView, there's an actual feature you could draw arrows, okay? Sometimes at first it's best to set up your trend line and get out your arrow tool and just start drawing the pullbacks and the high highs and whatnot, okay? And yeah, that's...
I'll talk about the green one that I just drew.
There you go, JJ's.
You call me JD?
JJ.
Oh, okay, fair enough. So who reckons that green one's valid? Thumbs up, who reckons that's cool? Yeah, no, it's not. What I've done there is I've just made the trend suit what I want to see. I want to see that that's a pullback, and that's exactly what I've done. I've looked for situations that aren't necessarily correct. So example, I started off the body here at the tip. Don't even have a touch there, but it's close enough. I've cut straight through a candlestick there and considered that to be a key area. And I've gone, oh yeah, there's 2 touches at the end, but really I wouldn't know that that's happened. I'd be looking at that section there. This is a big thing in trading. You will want to see trends that aren't really there because you want to make money. And this goes back to greed. You know, take what you can. Don't get too greedy. Don't go for the 100 million hits straight up. You know, if you start to get lazy with your trend lines, you'll start to see things that aren't there, and you will end up losing money. In this situation, you would have made money, but there's a lot of situations where it will go against you.
So if you guys want to write up a checklist, a very quick one. Step 1 for a trend is identification. So is it an uptrend, downtrend, sideways? And by that, are we looking at high highs, high lows, and etc.? Step 2, okay, we're looking at the pullback, so the retracement. So has there been a pullback completed? Because at the end of the pullback, that's where we look at entering. Step 3, we look at this whole momentum idea or this acceleration, deceleration concept. So is the market starting to decelerate? The candlesticks are getting bigger, they're getting smaller. Okay, that's just extra guide. Step 4 is patterns, which you don't have to worry about now. We go into that next week. Is it next week we're doing patterns? Yeah, we are. Triangles and yeah. All right. So we look at patterns, which you don't have to worry about now. That was step 4 here. All right, step 5, risk management. Now, actually, you know what? We'll do that later today. We'll show them the risk tool.
We have a whole section dedicated to risk management next week.
Oh yeah, we do too, yeah. So we'll just cover that next week as well. So basically, with risk management, we're just talking about your risk to reward ratio, your consistency as well. We're looking at your profit factor, and you're talking about your risk, how much to risk, all that boring bullshit. Actually, no, that's important bullshit.
Yeah, it's pretty important stuff. All right, so that's all the theory that we have to cover today. So what we're going to do now is pretty much going to do what we did last week. We're going to chuck an analysis up on the board. We're going to draw some trend lines. We'll chuck in some useless indicators to confuse you.
And
you know what was actually so funny? I meant to bring this up earlier. I was doing a bit of research into a new theory that I've been looking at for a while. Called the law of vibrations, and I was reading
the law of vibration.
You
seem familiar with those.
To do a bit, okay. Ha 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 ha. Yes, ha ha. Anyway, and do you remember last week I was talking about the moon cycle?
Oh yeah.
What was that? Moon phase.
Moon phase.
Yeah. I was so into this guy talking until he wasn't talking about moon phases. He said I was so into what he was actually talking about, and then he said, we're literally getting these signals from space, and I'm like, yeah, close the tab, let's go. So just when you go to do your own research, just probably look up the guy that's speaking, because I do not, and I spent 2 hours listening to talk about.
Close that tab and onto the second tab right after it.
Sorry?
Close that tab and onto the second tab right after it. PORN hub. Let's go.
So funny.
Shut up, Hagrid. Yeah.
Alright, so let's pick an asset, guys.
So except
Not all at
Poland.
once.
Whoever picks Poland, you get out. Okay,
Anyone have one that we want to look at? Let's not do stocks. Let's not do any weird commodities at the back, like palladium or some bullshit.
Palladium. Was it palladium?
Palladium?
Was it palladium you picked last time?
Yeah, anyway, so does anyone have
You know
something?
what? Actually, because of that, I want you to pick something.
Yeah.
Miss Palladium. What's your name, sorry? What's your name?
No, but last week you picked palladium.
Palladium, yeah.
Same,
Yeah.
same.
Yeah. I want you to pick us a new asset today. She makes it interesting, that's why. But just not palladium or just any commodity.
Just anything.
Anything you like.
Whatever you want.
When she says Poland, I know something like Uranus or some shit. Like that's not even a stock. Like just something.
Something, any. I don't know, because you kind of picked it. You know, anyone just scream something so we can move on with it. Silver, done.
Fine, next. I wanted to do the DAX.
Who said silver? Who said silver?
Oh, he said no stock.
Mr. Silver.
He said no
Do you want to
stock.
go silver USD or silver?
It's a commodity. It's a commodity, not a stock. Yeah, go. Owenda. So there are differences. There's commodity, there's stock indices, there's future trading. What are we doing? Trends? Do 2 hour. Do the 2 hour. Yeah. Oh yeah. So very quickly, I forgot to mention the most important thing. What time frames do you draw trends on? This is where everyone asks me. Okay. Anything under the 1 hour time frame. Does that make sense? Anything under the 1 hour time frame, in my opinion, when you're drawing trend lines. The reason I like drawing them underneath the 1 hour time frame is because of this concept of what? Starts with N. I speak about it all the time. Noise. Okay, so if you have a news event happening outside the 5 minute time frame and you have a trend, you can forget about your trend.
But you know how you don't trade news events, the both of you, right?
Yep.
So how soon before news events taking place and how soon afterwards do you not trade?
Good question.
1 hour after.
1 hour before, 1 hour after.
So is that conservative or aggressive?
That would be both.
That's just so you don't lose money.
Reason is because, okay, so put it this way, right? Example, this morning I entered the trade, okay, into the British pound. Now I'm looking at a long,
Okay.
Sorry?
Never mind, yeah.
Oh, it's not something to enter.
Okay.
I'm not saying what to enter, that's the thing, see?
Yeah, okay.
So example, I entered into a trade, the British pound, okay? So me and Jacob were discussing earlier, there's news coming out this week for the British pound. However, my trade, I'm not going for a short-term trade, I'm going for a long-term trade, like 2 weeks. So news events, for me, are irrelevant. I don't really care about them. But if I'm, say, doing a day trade, going maybe for 5-6 hours entry, then I don't want to be anywhere near a news event while I'm trading. Does that make sense? Example, last week there was a US non-farm payroll that came out. So this affects the USD, anything with the US dollar, basically. So I was trading the USD CAD, okay? So I waited 1 hour after the news event happened, and it was, if I remember, it was bullish. Yeah, it was very, very bullish. It was, yeah. So it was very bullish as an example. And I waited maybe 2-3 hours later until I hit a sell position. Does that make sense? Why I did that? I'm going to say, oh, no, I can't tell anyone. Okay, cool. It does go against the trend, that's right, but I'm not going to say. And it's pretty fucking damn good. Any questions from anyone?
Wait, you know how you said that the reason, so you had a trade on, you were planning to keep it for 2 weeks, and that's why fundamentals don't matter.
In that case, for me, that wouldn't bother me. No.
Yeah, I was going to ask, don't fundamentals matter the longer the time you're planning on holding?
Depends on what sort of fundamentals you're trading. If you're trading, say, off the economic calendar, such as, say, interest rates or whatever, matters in that same hour. But if you're trading off things such as the Brexit event or, I don't know, like something more economics, like in terms of politics, like, say, Donald Trump and what's happening with the government, how he's shutting down this and he's shutting down that to borrow money in funds and whatnot, that's more a long-term thing. Does that make sense? But I don't trade off the news. I trade off the technicals. The technicals reveal what's happening with the news.
Okay.
Because what happens with the news, people lie. The numbers, they don't lie. That's why we both trade technicals, but don't trade fundamentals. Does that make sense?
It's like I can tell you,
Yeah.
I can tell you anything I want. I can tell you that you're going to make $1 million off this.
Exactly
You know,
right.
and if okay, let's say I came up to you and I said, oh, I've got 20 years of trading, I'm a multi-millionaire, I drive a Lamborghini wherever I want. You know, I'd get into that, I'd convince you that you know something, and then eventually you'd start to trust me. If I said, oh, yep, I'm going to chuck $10 million onto this because of X reason, you're likely to believe me.
Exactly
But
right.
if you go and do your own analysis, you might end up seeing them actually wrong. Even though I might have more experience than you, you might see something that I've missed.
Exactly correct. Yeah. That's how me and Jacob are most of the time. Sometimes he's right, I'm wrong. Sometimes I'm right, he's wrong.
Yeah, like we
That's-
recently
it's
had
just-
an argument on Facebook about what one did you put out a signal saying you should buy, and I said sell because I was looking. AUD, yeah, he was looking at the AUD USD. He sent out a signal saying it's a buy, and I shot back at him straight away. Like within a second of him putting it out, I'm like, you are wrong for these reasons. And I actually don't know what's going on with it so far. I haven't checked since I said that.
No, it's a buy now.
Is it a buy? Oh, maybe I was wrong. Who knows? Anyway, so this is the analysis I've just drawn up. We've got a 14 period stochastics. We've got a 14 period RSI. This is our support area. That's our resistance. That there is going to be our trend line. What? It sort of is. Look, that is a bit of a resistance. Look there. You got there.
How drunk are you, bro?
You've got up there. You've got up there. That's valid enough. That's valid enough for a first trial. I'm not going to draw perfectly. You know, they have to form their own opinions. All right? It is valid though. Don't worry about what he says. He's a fucking idiot. Anyway, so what we're going to do again, buying on this side, selling on this side if you don't want to do anything in the middle. But if you don't do anything, I'm going to be asking you some questions. So pick something. And then Mohammed and I are going to try and convince you. So 2 minutes to decide. We'll give you a minute to move. And then Mohammed and I are going to try and pitch a decision to you.
Which one's sell?
That one will be buy. Okay. That one will be sell. In the middle, do nothing.
Last week.
Sorry?
Last week that was buy.
Listen, we got to shake things up, all right? So buy, sell, do nothing. But if you're in the middle, I'm going to pound you.
This is actually finding this hard. Someone find this hard?
So you think it'll retrace before it goes back out? Okay. No, I'm just thinking. Oh, it went up so much, and yet price itself. So
Very smart.
Yeah.
A little bit of this goes a long way.
For a drunk person, not bad, bro.
yeah, that's it.
Alright, so where's buy? Where's sell? That's buy?
Let's buy, let's sell.
What the
This
fuck's
is.
going on?
Come on, guys, we need a decision.
Can we like cut that table in half? So who's going boys?
Okay, so if you're not doing anything, I want you single file on kind of this area because we kind of need to know what's going on.
Well, are you guys selling or buying or neither or flying? What are you doing? Palladium, this Palladium, what are you doing? You're in the middle?
Okay. You blokes, you guys are all sell? You guys all sell? You guys are all buy? Yeah. You guys are all nothing? Okay, now what we're going to do, Mohammed and I, we're going to pitch to you why we think a certain way. We're going to try and change your decision. We're going to try and change your mind. There's going to be some arguing. It's already been heated. So, are you going to start? You go.
I personally think, okay, well, I'm going to stand on the other side. Okay, this looks so wrong, just saying. Yeah, like, we're lined up for fucking...
Go, Mohammed.
Oh, yeah, anyway, so, going on. I personally think this is wrong. Okay, I think it's fucking shit. I think it's disgusting. I think it looks like crap. I think it looks like cancer. I don't like it. Reason being is because I feel like it's drawn completely incorrectly. My personal opinion. Okay? You guys might like it. You guys may not like it. Now, Jacob, tell us why you like this thing.
Well, no, you do your whole pitch and then I'll fight.
Okay, so my pitch is that the trend line is drawn incorrectly, for starters. Look, it's clearly a downtrend. Okay, you can see the overall bias making lower lows and lower highs. So I'm pitching more towards the selling side. Sorry guys, just for now. But I don't like this trend line. So it's not finished enough, so I'm going back to the indecision side. Cindy, you had a question?
Is our answer based on the way you draw it?
It's
based on how
no. It's based on the information that's here and what Mohammed and I say.
Exactly. Next thing.
That's the
Exactly.
information you have.
We can imagine that we had our own.
Nope.
No imagine.
This,
No.
This is it. This is what you got.
This is what you got right now. Okay, we're not changing anything up. Okay, we're trying to trick you guys. Just so you know, this is the whole concept of trading. We're trying to make you think like traders. So,
So it's like, think of it like this. If I came up to you, handed you this information here, this trend line, this support resistance, this RSI, this stochastics, what would you do? That's what I want you to do.
basically, exactly right.
We try to get you to think of yourself, but what we're trying to do now is we're trying to get you to make a decision and stick to it
Exactly right.
based on something that someone else
So
might have.
I can see you all have your thinking caps on. That's good. Okay, that's what you need. You got to think, but don't overthink. That's the thing. Okay. So yeah. So my opinion. Okay. First, for starters, I said that's an incorrect trend line. Second of all, I don't use it one indicator. Third thing, I am leaning more towards the selling side. I just can't find an entry because it's an incorrect trend line. That's my opinion. Does that make sense? So JJ's, what do you want to say?
Okay, I actually am going with buy. Reason being is we have our third touch, well, actually our fourth touch on our support line. So for me, that's significant. We have quite a bit of distance between our support and resistance, and it looks like there's been a bit of consolidation. That's the word. Consolidation in this period here. So for me, to me, it looks like it's going to hit that support line and go up and potentially be a buy opportunity. Another reason why, yes, my trend line, it is drawn correctly. It's got significant touches on the red candlesticks. So yeah, it does make me think that potentially we could have a sell opportunity if it was to bounce up. However, I think that it's currently irrelevant.
Exactly right. So now, based off that information,
Does anyone have anything to say, or does anyone
any changes maybe?
any changes?
Anyone want to add something? Okay, Cindy's migrating to which side? Oh, to the west. We'll put this to the east side from my perspective. Okay, we're going to the east side. Okay, west. You guys still there with Tupac? All right, so you guys hanging out with Tupac. What about you guys?
West side.
Okay, so we're at.
Are you doing nothing or buying?
Palladium. What's going on there, man? Staying in the middle. What's your name, sir?
Bonnie.
Bonnie. All right, Bonnie. I'm not gonna call you Palladium. Bonnie, Palladium. Are you staying in the middle?
Yes, I
All right,
Okay.
beautiful. And yeah, so we guys are established. Are you in the middle? Sorry. Oh, sorry. What's your name? Jessica. Jessica. All right, so you're on the side. Okay.
Now I have a question. Who thinks my analysis is correct?
Who thinks Jacob's analysis is correct? Hands up.
Correct or incorrect?
Correct. Who thinks I drew everything on this correct?
Hand up. Oh, they actually. Oh, great.
Wow, you guys have actually all called me out. Yes, the support line is correct actually. You do have your third touch and you're going on your fourth. Your resistance line is correct as well. But one thing that is wrong is definitely that trend line. That is disgusting, and I feel like I had an aneurysm drawing that. So what Mohammed's going to do now? Mohammed, do a proper trend line.
I'll show them the channel itself.
No, just do a proper trend line and then we go into a channel.
The trend channels are key. Well, give it the indicators or leave them up there?
No, leave them up because for whatever reason.
Okay. Oh no mouse. This is my worst fear.
You'll be right. You'll manage.
Mm-hmm.
Can anyone tell me why they thought my trend line was wrong? Does anyone have an idea as to why it was wrong? Absolutely, it was just cutting straight through all the candlesticks. That's pathetic. You can have that happening maybe every now and then, but what a trend line is there to set your outliers. It's there to set your resistance areas. If you're just straight cutting through candlesticks, you're not getting any kind of picture there. You're getting just a useless piece of drawing that's going to give you mismanaged information. So once Mohammed's done drawing his, what are you doing?
Arrows. Show them the pullbacks and the range.
Okay, whatever. Do you just want to press play, see who's right?
Yeah. 1 second.
All right, so now we're going to see who's right
Well, that person would have done off.
when it wants to load.
Okay, it's the best option not to do anything with incorrect analysis. But the sales were ultimately correct because we formed the rally.
So I'm going to say that potentially anyone that said buy
No,
might.
who said buy actually? Wait, yeah, I'm actually pissed off. Who said buy? You guys said buy? What was my number one rule?
Don't go against the trend.
So why'd you guys go against the trend and say buy?
Because it was consolidating.
So I saw that part there, and to me that was consolidation.
All right, now look, be very careful. No matter what you see, even if you see consolidation, do not, please, for the love of God, do not go against. Trust me, it's because I've lost a lot of money doing it, bro. Don't go against the trend, okay? Don't go against it. You're just gonna lose. Your probability is losing. That's the thing, okay? Because like I said, like in this case, if you say saw this consolidation period and you wanted to buy, okay, what's stopping you from selling at resistance? And then you're joining the sellers. True? See what I mean? Think of it in that manner. And then if you sold at resistance, bang, look at your profit, man. Now, where do you close? That's a good option, okay? So actually, let's ask them that question. Where do they close? All right, so in that case, we sold here, okay? Where would our stop loss be? If we're selling, say, at this point, or any point in this region here, we can clearly see an establishment of a supply zone, an AKA resistance level. Okay, so where would our stop loss be? Would it be at maybe above the previous high? Just curious. Yes or no? Who says yes? Who says no? Come on, guys, I need hands here. Okay, so you guys say that the stop loss won't go above the previous low. Above the previous high. I would put it there. Now I'll tell you why. I used to do what you guys do, what you guys are thinking as well. Okay, every single person who's starting off trading thinks the same thing. Is it possible to be a millionaire and have tight stop losses? Yes or no? What I mean by tight stop losses are short stop losses. No. Because what's the market do? What did I say? Who's in control last week? Who did I say is in control of the market? The banks. What do the banks do? They manipulate price to suit their needs. And that's why, this is logically proven. Like literally, you could search anywhere online and even watch any Forex mentor, any Forex trader for that cause. You don't want too big stop losses, but you don't want too tight stop losses, because too tight stop losses, you don't give enough space for the trade to breathe. Okay, so as an example, like one of the students last week was asking me, because I give out like a signal service, but like with the trades I think you were the one, weren't you asking me about the stop loss? The size, why they're so big?
Yeah.
All right, so I've got like a website and I give out trading signals every week, okay? And basically my stop losses are quite big, okay? And everyone asks me, like 300-400 pips. Now people ask me, why the fuck are they that big? It's because I give enough room for the trade to breathe. Does that make sense? You need to give enough room to breathe. Because let's supposedly say, because look at the time frame here we're at, 2 hours, okay? That means here we're looking at a period of maybe 3-4 weeks, okay, just here. Just these candlesticks, right? So you need to account for things like news events. What if this happened, this peak, what if that peak happened up there? You see what I mean? And then you say supposedly it came back down. These are called fake breakouts. That's why you don't want a tight stop loss, okay? My personal opinion, I'll put it just above the previous swing high, okay? Any questions? Yep.
Would it depend on like how big your account is? It takes for 400 pips, but I don't know what size your account is.
Doesn't make a difference what size your account is. Depends on how much you invest, how much you actually risk, your lot size, in other words. Example, let's say you're using IG for example, right? As an example, let's say you have a $500 account, okay? Just as an example. Let's say you chose the smallest lot size, okay? So they call them a micro lot, which means that every pip equals $1, okay?
Is it the smallest nano lot?
Well, that's if you're using God knows what brokers.
Yeah.
Yeah, so God knows what brokers use those, man. But I sure don't. So let's say you're using the tiniest lot on IG. That means for per pip, you make $1. So if you have 300 pip risk, what's your stop loss? What's your risk? $300. And you have a $500 account. How many positions can you be in? Only one. So, exactly right. So in this case, okay, would it be, say, suitable to start with $500 with IG? No. You see what I mean? Because your account size isn't big enough in that case. Whereas say you fucking put all $500 into one trade, so every pip you're making say $200, that means in 10 pips you're gonna be like in a margin coin, you're gonna lose your whole account. You see what I mean? So I always advise that you risk only more than 1%. Sorry, can you pause that for a second actually?
I have. It's
All right.
It's still on.
No, because I wanted to show them something there, that's
I
why.
have paused
Yeah.
it, but it's just...
So,
That's a win.
now we had that breakout. We're gonna get to that in a second.
That's a win.
What do you mean that's a win? We sold back here, man. Who said that's a win?
So August, so August to October, just have to wait like what? 5 months? 5 months?
All right, so all right, so you're a funny guy, man. I like this guy. All right, so so in terms of, to answer your question, sorry, there's also another broker I know of, plus 500. I used to like it. Okay, that's where I made all my money there, to be honest. I don't like it anymore because of the spread. Just my opinion, that is, so don't try to sue me. Just because of the spread, and I also don't like it because of the withdrawal time. It takes 2 weeks to get my money out and put in a bank. And if you're withdrawing anything over $80,000, and this is the one thing that used to piss me the fuck off, it takes 4 weeks. Okay, so if I'd say take 100 grand, put in my account, it takes me 4 weeks to come through. IG, 3-4 days, you're good. See what I mean? And the thing with plus 500 as well that was a bit shifty, they don't have a phone contact. You can't actually call them. Okay, so IG they do. That's why I started using IG with Jacob. Even on my website, I'm gonna soon become an affiliate with them. I'm looking at becoming an affiliate with them, so I can advertise their services on my website as well. Does that make sense? So yeah, I highly recommend them.
We should move on to the next trade.
Yeah. So
Yeah, just he's off on the next asset.
Quick question.
Yeah, man.
For the trends, right? Drawing the trends. Did you say you don't draw anything under 1 hour or anything over 1 hour?
I don't draw anything under 1 hour.
Oh, okay.
I don't like it only because of the noise. I don't like it.
Too sensitive.
Way too noisy. And yeah, look, ideal time frames would be the 4 hour, 2 hour, 1 hour. Okay, because you could see the bigger picture from an intermediate basis to a long-term basis. Anything underneath the 1 hour becomes too noisy, like Jacob just said, too sensitive. We don't like that. We don't like trading with stress. We like trading with management and with control. Does that make sense? So yeah, who's any more question? Anyone have any questions? Okay. Now, one big question I wanted to ask you: if the market's not making lower lows and lower highs, by the way, you guys can move back to your sides. Like it's fine. You guys don't have to stay in a line. It just looks like you're in a school or something. All right. So actually stay there. We'll do some trades. So if it's not making lower lows and lower highs, and if it's not making high highs and high lows, what's it doing? Consolidating. Okay. So just wanted to get that point across. Okay, so consolidation doesn't always mean it's going to the side. I'm trying to make this clear. Consolidation doesn't always mean ranging. Ranging means it's going to the side. Consolidation means it doesn't know what the fuck it's doing. Big difference, okay? So if it's not making higher highs, higher lows, lower highs, we assume it's consolidating. Doesn't have to be going to the side. It could just be doing like big jumps and spikes and a fake breakout here and a pattern here. That's all consolidation, okay? So yeah, are there any questions by anyone?
Do you guys believe in carry trading?
Carry trading?
Yeah.
Yes, that's what trends are. Carry trading, in other words.
Okay, what I mean is, by carry trading, you take interest from one currency and you pay off the other, and you profit off the spread, the difference.
Oh, phew, no, I stay away from that bullshit, me personally. I don't personally believe in that, no. Reason being is, in my opinion, I've never seen proof that it works properly. You know what I mean? I've never seen profitable people profitable doing it. It's like saying, say, hedging. Do you know what hedging is?
Yeah.
So when you buy and you sell at the same time, okay, and whichever way it goes, you make money. I don't agree with this. What if it's consolidating? You're not going to make any money. You're going to lose both ways.
Yeah, but when it's consolidating, the interest will provide you profit. That's what it's designed for.
Correct, but where's the trading in that?
Okay, so I guess if you agree with the overall direction in addition to the consolidation, only then would you do a carry trade.
Look, me personally, I'm not disagreeing with you. Don't get me wrong, because I personally have never tried it. But me personally, I like sticking to more technicals. With this whole, like I understand what you're saying with the interest rate, how you profit off it, and etc. Only question to you is, how are you going to do that? How would you do it?
Well, what do you mean exactly?
Like, how would you do it with a broker, as an example?
Just go long a currency.
You can't just go along a currency. Because what if it goes short?
Yeah, but that's what I said earlier. If you agree with the overall direction as well as the current bias, assuming consolidation, then that should work,
Should.
right?
Should.
Well, for all we know, there could be another 9/11 and everything could start shit. Really, like,
Holy Jesus
that's,
Christ.
that's being a bit paranoid.
Wait a second. Okay, before we get to any of that, never make assumptions, bro. Ever with the market. Look, I'll tell you why. I'm not saying it in a way where I'm trying to like fucking sound up myself. When I say don't make assumptions, I say because if you have 10 grand and you lose it one day, who are you gonna blame? You're gonna blame yourself, and you're gonna feel shitty about it. Okay, like this guy lost $600,000 in 1 hour because of one simple mistake. You know what I mean? I've lost 60 grand in a day because of one simple mistake. You don't.
We're just being retarded.
You were being retarded too, bro, without a stop loss. Shut up, man. Who loses 600? At least I lost 60. I didn't add an extra 0 to that. You know what I mean? So, losses like that, okay, occur due to emotion and due to bad trade analysis. And being a fucking idiot. Okay.
Wait, do you guys understand the products you're trading?
The what, sorry?
Do you guys understand the instruments you're trading?
Of course we understand.
At a fundamental level.
Of course we do. Example, would it be better say to trade the Euro US dollar or the Euro CAD? Just curious.
I couldn't answer that. I really couldn't answer
Okay.
that.
Reason is, I can straight away tell you which one is better. Okay. We said first of all, the banks control everything, all the pairs, right? On a fundamental basis, in every way, because they're the ones. That's where we get our fundamentals from, the banks. Who hangs out mainly in the Euro US dollar? More people in the Euro USD or more people in the Euro CAD? Euro USD. So what tends to happen more to the Euro USD since it's a major pair? More manipulation. Okay. More aggression, more sensitiveness, more bullshit. In other words.
So you
Whereas,
should only trade minors?
I'm not saying only trade minors. I'm saying you should be careful trading majors.
Okay.
So when you say trade a Euro CAD, less people hang out on that pair. Does that make sense? So that's
More
why.
money you go as well.
Exactly
Biggest
right.
trade usually.
So I remember at the start of this year in January, I can never forget this, January 10, I think, or January 9. Every pair, every single pair, I'm not even kidding you, every pair. One night I woke up, I hit stop loss, I lost money. I was in the GPB USD. It was in the morning. I left the trade overnight. Done my analysis, everything was all good. It was actually making me profit. I wake up and I see a candlestick like that, something I've never seen in my entire life. And that was on an hourly time frame, mind you. An hourly time frame. So on a 5-minute time frame, that thing's like from the roof to the ceiling. I'm not even kidding, you know what I mean? Sorry, from the ceiling to the roof. Wait, fuck, roof to the ceiling, that's the same thing. From the ground to the ceiling. So what I'm trying to say is, that was due to something called a flux, okay? And this is on fundamental basis. The banks caused that.
Ahmed, as interesting as this conversation is.
And yeah, so let's get back to the trends now. But
Anyway, so this is our new analysis. If you want, we can talk about that all day. It's just, I'm not sure that's something everyone's interested in.
basically stay away from fundamentals, do technicals. That's the simplest way.
Yeah, so we're going to move on to technical analysis because that's better. Buying, selling, middle. If you, as you said before, if you have a different opinion to us, or if you think that there's different support resistance lines, or we've missed something, because I've just drawn this up real quick, just whatever. Come up to me and we can draw yours on. We'll put another graph on the side, we'll draw yours on and we'll get some student ideas going.
Oh, by the way, for anyone confused with this top line, this is just known as a trend channel. This is the trend channel.
Yeah, this is just a trend channel, and then I've just drawn an internal one as well. The reason for that is because there's no clear horizontal support resistance on this one, just because it's at such a high price.
So what a channel means is, you say get your support level, which you identified in blue. This is how you trade pullbacks, by the way. Okay, we'll show you how to do this. I'll show you. He'll show you his way. I'll show you my way after. I never ever trade trends without a channel. Just saying. These are extremely important. Every professional trader on the face of this earth trades with a channel, not just a simple trend line. What a channel is just like a tube, right? You have like one side and another side, right? So in this case, he's drawn a support level, and above it, he's got a this isn't a resistance level. Sorry, he's got a level here, but who can tell me what this is? Just out of quick assumption, okay? Who can tell me what this level is? By the way, they have to be parallel to each other, okay? So if you look at this level, who could say, is this resistance, support? It's neither. What it is just a limit. So basically, this is where we assume that the market will head to, based off where it previously went to. Example, from here, from there. Even though this breakout happened, that's fine. Sometimes it breaks above that level. Okay, don't worry too much about it now. Okay, you'll get the hang of these. They look complicated now, but you'll get the hang of them. They're very, very simple to understand. They're very easy. This here isn't much of a channel. This is more of a wedge, okay? Kind of like a channel. They act the same way. The difference is a wedge. We talk about wedges next week in patterns. So a wedge is a pattern with pressure. So yeah, and Jacob can explain what he done and why he done what he did.
Yeah, so there's no real reason to put a vertical support resistance line. Anything in a vertical support resistance line in this situation would be kind of useless. So that's why I've chosen to go with vertical. Anyway, so we'll have buy on this side, sell on this side, no idea in the middle, or you don't want to do anything in the middle. If you have any ideas that you want to bring up about it, come up, man. We'll draw yours on as well on a separate graph next to it. and we'll go from there. So 2 minutes, and then
By the way, you
Go for
can
it.
have trends inside trends. Okay? Like Jacob done here. You can have a trend inside a trend.
all right. So 2 minutes. Get to a decision. Yep.
Just a question before, how you can like identify like that was the
Wedge. It's a giant wedge. It's a giant right.
Please, don't make the same mistake. Remember my rule. Just say it. Alright? But yeah, who's buying, who's selling, who's neither? You guys are gonna buy it?
Are you in the do nothing game?
Do we have any sellers? This is buy, this is sell, this is neither. Okay? For me personally, I would be a sell for these comments because I am advanced enough to sell this shit. But I assume everyone will be an either. I'm assuming everyone will be an either.
Why?
Because not go against that trend.
Yeah, I know. But anyway, does anyone have any other ideas, any other support resistance lines that they want to throw on? Anything else they want to add?
Well, who's buying? You guys buying?
No, that's fair. That's fair. Is anyone going short? Is anyone gonna short it?
Oh,
Yeah, yeah. Is anyone? No, they don't want to do anything.
Yes, you guys doing
Question
neither?
about a trend line.
Sure, man. Go for it.
This one, you started off looking at that body, and then over there you're looking at a tail.
Is that a time? You might have actually caught me out here. I actually didn't mean for that to happen. Oh, so it is. Very good. Let me just fix it up then. Damn, being called out. Well, we'll just make it all tails then, it doesn't really matter.
You guys are selling?
Good on you though. Good paying eyes and paying attention.
Jacob, what are you doing buying or selling?
Bastard. Listen, you're selling.
I'm selling this shit.
Ooh, tough call on that one, Mohammed. Yeah, I reckon. Okay, I reckon I'm going to go short as well. My reason for short might be different from Mohammed, so I'll tell you why I reckon it's short. I reckon it's overpriced. That's my big reason. I think it's hit a resistance, 2 key resistance areas. So yeah, that's pretty much my big reason for it. Mohammed, similar reason?
Similar, yes, overpriced, and also it's touched the upper boundaries, so the limitations.
Okay.
I assume it's a sell.
Cool. You 2 buyers, man. Pretty. What do you reckon? Why do you reckon buy?
It's just for the long run, I think.
Oh, so you guys are saying long run?
Yeah.
Okay. Now, when you say long run, how long's that? Just wondering.
Just like we got the confirmations for the trend is going on.
But just be very careful because look at where you're buying. Are you buying at a higher high or a higher low?
It's higher price.
Higher high.
High buy.
Alright, so you're buying at a higher high. At the end of, so you're buying at the highest point, knowing that right after a pullback will occur, right?
Yeah.
Okay, so would it be safer to buy at the end of that pullback? Would it be safer to buy at the end of that pullback or at the highest point there?
At the end of the
At the end of the pullback. So now that you've answered your own question, does it help you now to move, say, to the neither side for now?
I'm sorry.
So now that you know what you want to do, so in this case, is that a higher up there?
I don't know.
So that's a high up there, yeah? But you want to buy at the end of the pullback?
I just wondering.
Yeah.
Yeah, I just.
That's fair.
Oh, no, that's fair. That's all right. So basically, that's why we're here to help you guys. We're here to show you how to do it. But just to answer your question, I wouldn't buy up there. That because it's already made its highest peak. Okay. Yeah, press play. Could keep going higher though. Don't get me wrong. But we would wait for a pullback. If that thing goes higher, then that's how we know that trading doesn't work, man. Just saying.
We should give up now.
Just saying.
Right, so the anticipation.
So-
Who do you think is going to form a pullback though? It'll hit the support and it'll bounce back up. I really wish we could go quicker.
You got all that money and you can't get a quicker laptop?
This is actually a really good laptop. Man.
Like last semester, the guy has all this money, he couldn't buy a mouse.
I have a mouse, it's just at home. Remember when you went off at me for not paying for parking?
Oh yeah, this one time this tight ass, he comes to uni, right? He comes like, what were you, like half an hour late or something?
Because I slept in.
It was like half an hour late. He's like, oh, I couldn't find parking. I parked like, where'd you park?
Like down the road, you know.
No, he parked at Westfield. He parked at Westfield, wasn't it? He parked like in God knows where because he didn't want to pay $5 for parking. I looked at him like this. I'm like, are you fucking kidding me? Yeah, don't be that type of person. Yeah, be a spender, but not that bad.
5th of May.
Dude, your laptop's killing me.
Yeah, I'm just gonna open up a new tab and then just go back to it because this is painful. 15th of May, 2018. What asset was it?
Now there is a condition. Okay, I said early on about pullbacks. What can pullbacks also do? They can dip down, but what else can they do? Who said consolidate? Hands up. My nigga. Why can they consolidate?
You say.
No, not in an offensive way. I have a habit of saying it. My man, that's the way. Huh?
Like, it will take a long time for a pullback. It might just go sideways.
Exactly right. So a pullback, by the way, meant no offense to anyone here. Okay, I love you all. But yeah, so we're unity and grace. So pullbacks can go to the side. And that's why we don't go against the trend. Okay? And yeah, so
There it is.
Channels. Do you ever use that as pullback? Like, do you
that's
just-
all we use as pullback.
If it goes back from the channels, like, does that mean something?
What do you mean?
Like, you know the channels that we have.
Yeah.
So for the Dow thingy, if we had a pullback on the channel,
On the channel. Yep.
would that count?
Of course it does.
Or does it only with the trends?
That's what I'm going to get to in a bit. I was going to do that. So for whoever sold, congratulations. Okay, you made a shit ton of money as anticipated because of our channel.
Now the people that buy, your big mistake was that you bought, buy, whatever.
Exactly.
You bought at a higher high.
Exactly right.
Instead of waiting for that, you've hit it. It's hit resistance. What you should have done was you should have waited for it to retest, dropped a little bit more, and then gone potentially in maybe down here. And here you probably would have been able to see a more of a horizontal support line.
I want to see how many pips is that actually, that big drop.
So yeah.
Right, that's the wrong one. That's the wrong one. That's the date one. That's the date one. You've got the date one.
No, 578 pips.
Oh.
It shows you there. So 578 pips, that could be anywhere between, depending on how much you invest,
Stolen money.
anywhere between
It's like what?
5 to 15 grand in the span of
13 days.
13 days. Okay, so in Jacob's case, it would have been 90 grand.
No, not that. I don't go that heavy in. It's got like maybe 50. 50.
Don't be a blow ass, alright? Don't be a blow ass. I've seen your trades, man. So, yeah. Now, that's the rewards of trading, basically. But for whoever said buy, you would have lost that much.
Your mistake was buying at
See?
the higher high.
Exactly.
Just wondering,
And I
isn't it just like hitting another resistance line?
No, that's not resistance.
Well, it does look like it has continued to go up and hit more resistance areas. So that there absolutely could have been that there could have been your time to sell. 100%. If you would have used that kind of strategy, you would have made money in that situation. I think it's time to hold it up now.
Where would you put your stop loss on that one?
In this case,
Yeah.
well, in this case, there's no previous structure high, right? And we're looking at selling, so just above the peak, in my opinion.
Like how much above the peak?
Usually, I go between. Look, it depends on the time frame. At a time frame like this, I'd go for 100 pips, 100 to 200 pips. It's just safer, but obviously, now one thing we haven't shown you guys yet what to do. Now this was just rough estimate. Okay, we could clearly see this was gonna drop because it was like Jacob said, it was overpriced. One thing we haven't shown you how to do is how to incorporate other time frames with this. How do you find your entry? See what I mean? So that's the thing we're going to get into. So far you guys are starting to understand the hang of it. Okay, you guys are starting to understand now how to identify direction, how to identify basic decision making in terms of your trades. For you guys who said buy, I suggest.
Actually, you had a word, and what he said was actually correct. You could have got entered into a buy position and then exited as soon as it hit the next resistance, but it's a risky move.
It's too risky. Exactly right. Way too risky. You don't want to risk your money. You don't want to, because in this case, you're not practicing with monopoly money. You're practicing with your cash. You know what I mean? And you don't want to lose cash at the end of the day. No one wants that. But yeah, that's that.
All right, guys. So we've had a good lesson today, and I think right now we're gonna call it as a day. So thanks for coming for the lesson, and hopefully we'll see you next week.
If anyone has any questions.